And, the problem is when you live in a bubble, you don't see the pin. Gold is the pin. It has pricked the bubble, right? The U.S. dollar bubble and the U.S. credit bubble, the whole global system of the U.S. dollar reserve and dollar hegemony is going down the drain. That's what gold is saying. And yes, I mentioned, Larry Kudlow dismissed it. Hey, we don't have to worry about it because the dollar's not going down. The bond market isn't going down. They will be. By the time they're going down, it's absolutely too late to do anything about it, right? The same way they were dismissive of subprime because they said, hey, it's only subprime. Now they're saying, oh, it's only gold. Silver closed today above $53. Remember, $50 was resistance. It was a big double top. And what was I saying on this podcast? I thought that we would blow through that double top and that 50 would become resistance, which is now the case. And in fact, if you get a chance to buy silver anywhere near 50, do it. But again, I got no problem buying it at 53. I said the same thing when silver broke above 30. I said 30 is the floor. So if you have to pay 32 or 33, what's the big deal? You don't have a lot of downside risk. So even though silver might pull back to 50 and a half or maybe 49 and a half, so what? Buy it now. It's not that much downside, and it may never pull back. We may never see sub 50 silver again. Now, maybe we will. I don't know. We're only $3 above it, but we may be at 60 before we're back at 50. Look at the momentum. In fact, if gold continues to rise $200 a week, we'll be at $5,000 a week before Thanksgiving. And if we keep rising by $200 a week, which percentage-wise would be a smaller percentage if we're at 5,000 than 4,000, but if we keep going up at 200 a week, gold will be at 6,000 before Christmas. Now, I don't expect gold to be at 6,000 before Christmas because there's got to be pullbacks at some point, although maybe not. Who knows? But it's clear that gold is going up. I mean, year to date, gold is now up 60%. Silver is up 84% in 2025. We still got 2.5 months left of the year.
Gold's trajectory is rewriting history. With gains exceeding 60% this year alone, the metal is signaling panic beneath the surface of global markets. At current momentum, gold has flirted with $5,000 and could challenge even higher levels as investors flee risk. While corrections are inevitable, confidence in paper currencies is evaporating. Central banks from Asia to the Middle East continue adding gold to reserves at the fastest pace in over 50 years. When major economic players vote with their balance sheets, the message is impossible to miss. Gold is not just rising. It's reclaiming its role as the world's ultimate money.
We have not had a year like this in precious metals since the 1970s. And that's not a coincidence that what's happening now hasn't happened since the 1970s, because we are living through a similar economic period. It's not just that we got stagflation, which we had in the 1970s, and we're going to get a lot more of that in the 2020s. But again, 1971, we kicked off that decade going off the gold standard. That's what set all this in motion. That resulted in a major dollar depreciation. And gold went way up during the 1970s. Well, something is happening now that is just as significant and maybe more. So back then, we went off the gold standard. So we told the world, hey, we're still on the dollar standard. We're just going to not back it by gold anymore. So we're going to renege on our commitment. We're not going to give you gold for your dollars. You could just hold on to your dollars. And the world basically did just that. The world stayed on the dollar standard, despite the fact that we, pulled the rug out from under them in that we reneged on our promise to pay gold for their paper. But they continued to keep the dollar as the reserve. Now, they marked the dollar down. The dollar lost 2/3 of its value against other currencies, but they still held it as their primary reserve asset.
The 1970s marked the end of the gold standard, exploding inflation, and a collapsing dollar. Today, a similar economic storm is building. Stagnant growth, high consumer prices, and declining trust in policymakers are forcing investors back into historical havens. But the stakes now are greater. In 1971, the U.S. only cut gold backing. Today, the dollar's entire global dominance is under review. Nations are settling trade in alternative currencies. Oil deals are shifting away from the petrodollar. The script may rhyme with history, but this version has new actors, new technology, and far more dangerous systemic leverage.
What's happening now, over 50 years later, is now the world is taking action. They're pulling the rug out from under us. They are now moving off the dollar standard. And this probably has even bigger implications for us than going off the gold standard did, either for them or us, because our entire economy, our entire way of life over that time period has evolved to become dependent on the dollar's reserve status, dollars that we can create out of thin air. Not that we have to back by gold or anything. We just conjure them into existence, and we use those dollars to buy consumer goods that we don't produce. So we get to live beyond our means. And then the world is in a relationship where they loan us back the dollars they earned, selling us stuff that we didn't make at low interest rates. So now we can go into debt and buy more stuff, and we can buy assets, and the stock market goes up and the real estate goes up. But our whole phony economy is completely built on the foundation of the dollar's reserve status, and that's the rug pull. That's what's happening. That's why gold is doing this. Right? It's not just a random coincidence. And of course, the significance is being lost on just about everybody when I hear the discussions on gold. But probably one of the most significant admissions that I've heard was from Jamie Dimon, who is a highly respected guy. And Jamie Dimon was quoted as saying, gold can easily go to 10,000. Easily. And I agree. It can easily go to 10,000, and it very well will go to 10,000 and a lot higher than that. But here is the more significant aspect of the Jamie Dimon quote. Jamie Dimon said, quote, "This is one of the few times in my life it's semi-rational to have some gold in your portfolio." This is one of the few times in his life. I mean, he's my age, I think. He's been around for a long time. But he's saying in his entire life, this is one of the few times that it's semi-rational, like not completely rational, but at least there's a modicum of rationality where you might want to have some of your portfolio in gold. Now, first of all, clearly, if gold is above 4,200 and 20 years ago, it was 25 years ago, it was below 300. And that was certainly within Jamie Dimon's lifetime. It was within his career, not just his lifetime.
For decades, America enjoyed a unique privilege, issuing the world's reserve currency while importing what it lacked. Dollars flowed outward and returned as cheap loans, financing consumption and asset booms. But that cycle is breaking. The BRICS coalition has expanded to include energy-rich nations, pushing for a parallel financial system. Sovereign gold accumulation has reached levels not seen since the Cold War, and major governments are openly reducing exposure to U.S. treasuries. The message is loud. Reliance on a single currency is too risky. The world is preparing for a future where the dollar is no longer king.
And, the problem is when you live in a bubble, you don't see the pin. Gold is the pin. It has pricked the bubble, right? The U.S. dollar bubble and the U.S. credit bubble, the whole global system of the U.S. dollar reserve and dollar hegemony is going down the drain. That's what gold is saying. And Yes, I mentioned, Larry Kudlow dismissed it. Hey, we don't have to worry about it because the dollar's not going down. The bond market isn't going down. They will be. By the time they're going down, it's absolutely too late to do anything about it, right? The same way they were dismissive of subprime because they said, hey, it's only subprime. Now they're saying, oh, it's only gold or it's only silver or precious metal. So we don't have to worry, right? Gold is just going up, but nothing else bad is happening. Yes, gold going up like this is telling you these other bad things are going to happen. And they're going to happen suddenly when they do, right? The dollar is going to fall through the floor, and it's going to take the bond market with it.
When a bubble grows large enough, denial becomes a policy. Experts brush aside warning signs until they can't. Today, U.S. government debt, corporate borrowing, and consumer credit are stretching system limits. Gold isn't just rising, it's pointing directly at the weak spots. If the dollar stumbles, bonds will collapse alongside it. Quantitative tightening has quietly ended, and pressure for new emergency stimulus is mounting. Once the bond market cracks, the Federal Reserve may unleash unprecedented money creation. When currency faith evaporates, consequences arrive suddenly and violently. Precious metals are moving first because they always do.
And we got the beige book today, and the Federal Reserve has basically officially now ended quantitative tightening, which is something I said they would do. They still have a massive balance sheet, but this is just the first step to launch quantitative easing. It is coming. I thought it would have happened already. They managed to avoid it, but it's coming, and it's going to be bigger than ever. It'll probably start by next year sometime, maybe even by the end of this year, because it depends on when the bottom drops out of the bond market. It's going to happen any day, right? I mean, we don't know, but it's going to happen. Gold's going to keep on going up until the dollar breaks, until the bond market breaks. But before that happens, right, you do something to protect yourself. And one of the things you could do is just buy some gold and silver. Now, we had another, a significant interview. I was listening to our Treasury Secretary, Scott Bessent, and he was interviewed. He was at some Invest in America conference, which, of course, misses the whole point that it's divest from America that's actually going on.
Few understand what a loss of reserve status would mean for everyday life. Imported goods become expensive, interest on national debt balloons, economic stability disappears. While the timing remains uncertain, the trajectory feels undeniable. Gold and silver are signaling urgency long before headlines catch up. Governments react late. Individuals cannot afford to. Diversification into physical assets becomes not speculation but defense. As policymakers debate, the metals market is already responding. The question isn't whether a shift is coming, but whether we prepare before it arrives. In times of systemic change, real value is the ultimate safeguard.